Hello traders, hello traders. Today is the 1st of December 2013 and the time in London is 13:35 p.m. in London, in New York 8:35 a.m. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSGW 24 traders. And our website is www.stochastic-macd.com. For all trades, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. The title of this video is High Frequency MACD Trading Part 2. If you have not watched Part 1, you may do so before watching this video. Alright? In the first video, we were discussing how to avoid creating too much distortion in this messy market using high frequency trading, especially if we are talking about a major high frequency trading firm. I have highlighted in that video the best approach that one can use, creating a kind of algorithms or rules or trading rules that computer may execute using the hourly chart and the entry time frame. I recommend to traders to watch high frequency MACD trading part 1 before watching this video. All right. In this video, we're going to talk about the best approach, a new best approach that a high-frequency trading firm can adopt to avoid distorting the market or to avoid upsetting other market participants or to avoid attracting too much criticism. Because since 2008, all right, there is this kind of worry about high-frequency trading firm, high-frequency trading. I also told traders that this video is about a technical high-frequency trading. There is another approach, which is fundamental high-frequency trading, when we are trying to have access to major economy news before the general public. All right? Let's get started. The rules that we're going to set are very simple. We can create a software or a trading robot that the computers can execute, all right? And the rules are simple. We want to see for bullish signal. You can notice that in this video, I was focusing mostly on bullish signals. So the inverse is true or the opposite is true for bearish signal. I will not repeat myself, recording another video about the bearish signal. So, all right? The first rule, we see a double bottom pattern, chart pattern on our entry time frame. As a high frequency trading firm, we can trade on a 10-second time frame, 1 minute time frame, 2 minute time frame, 3 minute time frame, 5 minute time frame, depending on the strategy that we want to apply. All right. Here I'm using the 3-minute chart, so I'm not on the 1 minute chart. I'm on a 3-minute chart because I don't want to take a wrong signal. I want to take a high probability trade setup. That's why I moved to the 3-minute chart. All right, but it's still valid for 1 minute time frame and 10-second time frame. All right. A double bottom pattern on the entry time frame. All right. That's the first condition that we are telling the computer. So a chart pattern recognition software can quickly detect a double bottom pattern. So the computer will come with a list of stock that have displayed a double bottom pattern on a 3-minute chart. Okay. Second rule, to filter out the useless trade setup. Second rule, verify if the double bottom is formed at a key resistance level or at a key level on a higher time frame. So the first condition, double bottom pattern on the entry time frame. Second condition, confirm if the double bottom pattern has been formed at a key level on a higher time frame, a time frame that is superior to our entry time frame. That's the second rule. If we confirm that the double bottom pattern is formed at a key level on a higher time frame, so we see this double bottom pattern. Now we want to confirm that this double bottom pattern is formed on is formed around a key level on another higher time frame. All right. Once we confirm it, and MACD crosses the third rule is that after we confirm that the double bottom pattern is formed at a key level on a higher time frame, we will wait for MACD, or the third condition is that MACD must cross above a signal line, and then we buy. When we buy, we will take the first profit as soon as the price reaches the first and nearer resistance level on our entry time frame. It can be 2 pips, 3 pips, or we may say as soon as we achieve 3 pips, 5 pips, 10 pips, all right? Depending on our risk tolerance, okay, we may set the rules to take the first profit. So we may decide to take 10 trades as soon as MACD crosses above signal line and close maybe 60% or 70% or 50% of these trades as soon as we reach the first and nearest resistance level, or as soon as we reach our target, 3 pips, 5 pips, close 70%, or close all trades. If the price goes above the first and nearest resistance level, okay, we will continue to buy, or we will allow the rest of the trade to run, provided the MACD is still above the signal line. So we will take this trade all the way here, all right? And we will take the first profit here. If we find a support above the first and nearer resistance level, i.e., price display a higher low or a bullish pattern above the first and nearer resistance level, all right? Or MACD crosses above a signal line again after the price is above, okay, the first and nearer resistance level, which is the blue line here. If MACD crosses above the signal line again, here it is, we will buy again. We are using the standard MACD 12.26.9. After testing, we may decide which setting we should adopt for MACD, whether we use MACD 10, MACD 8, MACD 12, MACD 14. We will test it, okay, first and see which one is profitable or viable, all right? So the first rule, we are looking for a double bottom pattern, all right? Second rule, verify whether the double bottom pattern has been formed at a key level or not. If the double bottom is formed at a key level, buy if MACD crosses above signal line. All right? Take first profit as the price reaches the first and nearer resistance level. If MACD crosses above signal line, while the price now above the first and nearer resistance level, buy again. Or hold the rest of the trade if the price goes above the first and nearer resistance level, and take second profit at the second nearer resistance level, and so on and so on. Or buy again if the price displays a higher low above the first and nearer resistance level. So here we can see that the price displays double bottom pattern. We will verify whether this is a key level. Let's go to the hourly chart. I'm using the hourly chart here, but it doesn't matter. One can use different time frames. You can see the line that are drawn on my 3-minute chart. I'm going to color it now. This is the line that are drawn on my 3-minute chart where I notice or I recognize, okay, a double bottom pattern on my 3-minute chart. I'm going to color it now into orange. So I see a double bottom pattern on my 3-minute chart. I draw the key level, I draw the horizontal line. I want to verify whether the double bottom is formed at a key level on a higher time frame. Now, I'm going to the hourly chart. Is this orange line a very important level? Yes, it is. You see on the hourly chart, the price went there, found a resistance, slowed down, went horizontal. So there was a bullish progression. This is a normal market pattern, rising channel. All right? And then we have what? A consolidation. Why the price consolidation? The price consolidation when the price reaches a key level. the price is acknowledging a key level by consolidating. So this orange line, the computer will confirm that, yes, George, this is a key level. So I know that I have a setup. So I have now confirmed that my orange line, or the double bottom that I've seen on my 3-minute chart, is formed around a key level, this key level on the hourly chart. Let's go back now to my entry time frame. Or this, we can set this rule for the computer to, execute this trade. Now, MACD crosses above signal line, we buy here. Take first profits as soon as the price reaches the first and near resistance level and our entry time frame. Let the rest of the trade run, provided that the price does not display double top at the first and near resistance level. If the price goes above the first and near resistance level, we hold the rest of the trade, or we wait until the price displays the first higher low. See the first higher low here, where I'm moving my cursor. Buy again, or if MACD crosses above the signal line, as the price is above the first and near resistance level on our entry time frame. The first and near resistance level is this one. So if MACD crosses above signal line, above the first and near resistance level, buy again. So we buy again because we are giving priority to buy signal. All right, you see now? So the rules are very simple. We are looking first for a double bottom pattern, which is a bullish pattern. We want to confirm whether the bullish pattern has been formed at a key level on a higher time frame. And we wait for MACD to cross the above signal line. We take profits when the price reaches the first and near resistance level. We let the rest of the trade run, provided that the price did not display a double top at the first and near resistance level. We let the rest of the trade run. Or if the price displays a higher low, or MACD crosses above the signal line again after the price, is now above the first and nearest resistance level. This is a better approach for a high-frequency trading firm instead of sell, buy with MACD crossing anyhow and continue to distort the market anyhow. All right? As I explained to you, this high-frequency trading firm, most of them do not design or create this algorithm or this software. They will outsource this work, so they will ask another company that is specialist of creating algorithm or trading robots. They will tell them, MACD crosses below signal line, MACD crosses above the signal line, buy, sell. We want a software like that. They will create it for you, all right? And then you can house it yourself and use it as your own proprietary high-frequency trading system. Now, they will test a different strategy, and when they are satisfied, they will send the rules, to the computer engineer that will create the software for them, and then they will test the software whether it's reliable or not. If it's not a viable, software, they will adjust the rule, modify the rules, or add new rules. All right? But they are trading financial instruments that are moving very fast, and they may design different rules, or they may modify the rule or create a new rule for another financial instrument because of the characteristic of each financial instrument. Here we are looking at the NASDAQ Composite Index. Repeat, NASDAQ Composite Index. This is the epic here. Charlie, Oscar, Mike, Papa, Quebec, X-ray, COMPQX. All right? I want to show you now another financial instrument. This time, all right, I'll bring on now the S&P 500 using my new set of trading rules. We are looking for a double bottom pattern. Here I'm using the 3-minute chart as my entry time frame. All right, so we can see here. I hope you can see. Can you see your chart? Zoom into it a little bit. You can see now. So on my 3-minute chart, my computer will recognize this pattern as a double bottom pattern. Now, that's the first rules. The computer will now check on the hourly charts, doesn't matter, a higher time frame, whether my line that I draw, which I'm going to color now on my 3-minute chart, I'm going to color now, into, we used orange before, I use green now. Whether this, light green line is at a very important level on the hourly chart. Let's zoom into it. What's happening here? So you can see that the price was bullish up to this green line, and then the final resistance. So it's an important level on the hourly chart. Pull back. Now it went above that resistance level, and now it was consolidating along the green line. So it's a key level on a higher time frame. So we have seen a double bottom pattern on a 3-minute chart. We have now confirmed that green line is a key level on a higher time frame. Next, we are waiting for signal. MACD must cross above its signal line. Here. Take first profit as soon as the price reaches the first and nearer resistance level. Right here. If the price displays double top at the first and nearer resistance level, close all trade or sell. Here we will close all trade because as soon as the price reaches the first and nearer resistance level, it pull back. So we will wait for it to go above it before we buy. Here you see the price display double top. In fact, we will close all trade straight away. All right. If the price goes above the first and nearer resistance level, and MACD crosses above the signal line again, or the price display a higher low, we'll buy again. Here the price MACD crosses above the signal line, and the price is above the first and nearer resistance level. Take second profit if the price reaches the second nearest resistance level. Okay, second nearest resistance level. All these are rules, trading rules, algorithms that we will ask the computer to execute. Second and nearer resistance level. If the price goes the second and nearer resistance level, and display higher lows or find a support, or MACD crosses above the signal line, above the second and nearer resistance level, we'll buy. But always, we can set different rules, or we can ask the computer, anytime you want to buy, verify whether the price is at the key level. Okay? All right? So we bought it here. We take first profit here. Okay? Price roll it down. So we can, this is computers taking this trade. These are not human beings. So we take the first profit here. Goes above it. Okay, we buy again here. All right? Let me remove my line. So we have finished with the first double bottom pattern. Now, again, look at this. Our algorithm will recognize that this is again a double bottom pattern because there was a low and a low. Because the computer already knows that this green line is a key level, the computer will now wait, see this low and this low. We have a double bottom pattern, yes or no. Now the computer is waiting for MACD to cross above the signal line because we have confirmed that the green horizontal line is a key level on a higher time frame, and we recognize a double bottom pattern. Wait for MACD to cross above the signal line, and we will buy again. Take first profit, okay, blah, 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 all right? Take first profit, take second profit, take third profit, according to the rules. Now again, we have again a double bottom, this one and this one. The computer recognizes, say, George, this is another double bottom pattern. All right. Computer also confirmed that the green line is already a key level on a higher time frame. Now we are waiting for what? MACD to cross above the signal line here. Or we may say bearish trend line is kaput. This is a better approach. As you can see here, I did not use the 3-minute chart alone. I'm trading around key level from a higher time frame. I'm using a double bottom pattern, which is a validation of a support level. I'm not violating the price. I'm not using MACD alone to make my decisions. All right. I'm combining the price. I'm giving priority to the price, and I'm acknowledging key resistance and support level. This is a better approach for high-frequency trading system. What we have seen, as I explained to you in these videos, that a lot of algorithms are running in this market, trading like a cow. All right, now this is to laugh. All right, this is to laugh. All right, as I explained to you, I'm not here to poke fun on these market participants because they are not designing the algorithm themselves. They are outsourcing these software from these companies. On the other hand, we can't 100% blame these companies that are creating the algorithm because some of them are not traders. They don't know anything about trading. They know how to create the software. You give them the rules and they create the software for you. If you give them a useless rules that are violating the market, you create a dodgy, so to speak, a trading system. As always, the high frequency traders are very smart. The computers are not trading the trade alone. There are human beings monitoring the performance of these trades. And if it's not working, they will switch it off. Or if some major economies are due, they will, okay, stop running the software, or they may apply a typical, okay, set of rules, maybe when the market opened during the first 2 hours, or during the first hours, or during the first 30 minutes, all right? They may use different rules, okay, to set their trading system. The purpose of this video is to highlight some of the mistakes that the high-frequency trading firms are making, the algorithm builders are making, all right, and also to open this discussion about a better way to use a high-frequency trading, combining the price and indicators. If one is building a trading system, one must always incorporate the price and avoid, okay, violating the market principle. Do not trade on a single time frame. Do not make a trading decision on a single time frame. That's why when a trader purchases the TSTW24, we have a website for it. Watch the video, ask questions. We create a system, you do not create it, ask questions. You do not understand something, ask it, all right? Use the system with the market patterns, okay? And you will make a better decision, all right? So here we are, we see again a double bottom pattern on a 3-minute chart. This is our entry time frame. We know that the green line is a key level on the higher time frame. MACD cross the bull signal line, we buy. Take a first profit at the first and nearer resistance level, and so on, as I already said it. Okay, here we are. If the price goes above the signal line, above the first and nearer resistance level on our entry time frame, and MACD crosses above the signal line, or MACD is still above the signal line, we'll continue to buy. Here you can see that as the price reaches the first and nearer resistance level, it went horizontal. All right? So many tops here on our 3-minute chart. We may decide to close our trade and wait for it here. You see it gap up a little bit. Can you see it gap up a little bit? You see it gap up a bit, okay, on the 3-minute chart. Here we are. The price now above our first and nearer resistance level on our entry time frame. We are looking for opportunity to buy. We wait for MACD to cross above, okay, its signal line again here. All right, and we buy again. Take second profit at the second and nearer resistance level on our entry time frame. We are high-frequency trading firm. We don't want to remain too long in the market. We want to take tiny pips consistently. There's another financial instrument that we will look at, okay, talking about high-frequency MACD trading, part 2. And also highlighting the best approach that these high-frequency trading firms should look at, all right, or recommend to their software builders to avoid too much distortion in this market. If you like this video, like it. If you don't like it, dislike it. Put your comment below, okay, and we will continue with this, interaction. I want to bring on now the Euro-Yen, okay, Euro JPY currency pair for forex traders, and we're going to apply the same rules. This is not what I will find it here. Hold on a second. Looking for Euro Yen. Here it is. By the way, the software that we are using here is TC2000. All right. So they say we should mention them. Okay, here we are. So we are looking for double bottom pattern on our entry time frame. So you can see there was one here. Okay, I will discount this. You can see there was a one, there was a low, another low. Price went up to the first and near resistance level and displayed a double top. I will focus on this one here. Are you following me? Okay. So there was this low, followed by this low. This is a double bottom pattern on our entry time frame. This time we are using the Euro-Yen currency pair. We are on a 3-minute chart, high frequency trading. All right. I'm going to call out. So we see a double bottom pattern on our entry time frame. The computer will quickly note down the key level where the double bottom pattern has been formed. Okay, because I'm not a computer, I'm going to color it into red, into pink, all right? And now I'm going to go to my hourly chart to verify or to confirm, all right, or to validate this level, this pink horizontal line at the key level on a higher time frame. This is to avoid that I'm not distorting the market or creating too much mess in this market. Okay, On this hourly chart, we can see that the price ran fast, came near, okay, was bullish, came near the pink line, and suddenly couldn't even come and touch it and start going horizontal. So why the price going horizontal? Because the price is acknowledging a key level. Then the price went horizontal, okay? So this now we can confirm, we can say that the pink line is a key level on the hourly chart. Validation or confirmation done. Okay, let me remove my drawing on this hourly chart. We have now confirmed that the pink line is a key level on the hourly chart. If you are not satisfied, here it is, the price came again, near it, then went down. Second time, display a double top, a top and a top, went down a little bit. So it's still confirming to us this pink line, where we see our double bottom pattern on the 3-minute chart, is a key level. Second verification done by the computer. Now, what do we wait for? According to our rules, we will buy if MACD crosses above signal line, so a double bottom pattern at a key level on a higher time frame, and MACD crosses above a signal line on the entry time frame, or, okay, we will buy, okay, here it is, we will buy, take first profit as the price reaches the first and nearer resistance level. In fact, you can see that it came near it, okay, and then burst to it with bullish candle. If you see like this, if the price break through a key level like this, the resistance level fast like this, don't try to sell it, be careful. It's bullish, break through it bullishly. All right, if the price display high low and MACD crosses a bull signal line while the price now above the first and nearer resistance level on our entry time frames, we'll buy again. In fact, if you look carefully here, look at MACD, the moving average conversion. So our first signal was this one. Now you can see that as the price came near, and MACD pulled back a little bit here. Can you see it? And then MACD goes back again up. Second signal above it. Yeah? And then it ran fast. These are beautiful signals which did not violate the market principle, which is not creating a distortion in this market. All right? So now we will say, the computer will see this one as the price came here. The computer will say, George, this is another double bottom pattern. The computer already know that the pink line is a key level on a higher time frame. Game on. We are waiting for MACD to cross above the signal line. Here, we are here. Here, right here. Pay attention to the vertical line. Right here. We buy. We buy, price reaches the first and nearest resistance level. Here, this one. Are you with me? First and nearest resistance level. We are buying now here because of this double bottom pattern at a key level. MACD now cross above the signal line on our entry time frame. We buy. Price reaches the first and nearest resistance, which is again the blue line. We will take first profit. All right? We can wait until the price goes above, all right, the first and nearer resistance level, and we buy again. Price reaches the second and nearer resistance level, take the second profit. Now, as I'm explaining to you, I need to repeat this. If you're an experienced trader, don't get upset, or I need to say it, all right? We take our second profit at the second and nearer resistance level, and so on and so on. All right, so we will take the first profit here. You see, come down fast, you see. All right, so to avoid losing, because we are high frequency trader gambling, all right, or trading with a huge amount of money, so there is a designated, okay, budget for this kind of risky trade. So do not think that the high frequency trading firms are putting all their money on this type of trading method. They trade, okay, on the 10-minute chart, even on the hourly chart, on the 4-hour chart. But their goal is to take a fast profit or a quick profit, all right, with a tiny risk consistently. So do not think that they trade only on a 1 minute or a 10-second time frame, but they spend most of their time on the lower time frames. But different strategy or different trading rules, okay, are adopted on different time frames. All right. Okay, now the price is is here. So the computer will say, George, this is another double bottom pattern. We know that the pink line is okay, a key level. The computer will apply the same rule again. Buy, MACD crosses above signal line. Okay. All right, it's still above the signal line. Okay, here we see a double bottom. MACD now is still above the signal line. Buy. Take first profit at first and nearest support level. Take first profit at the first and nearest resistance level, and so on, and so on. Price comes to this point. You see that, zoom into it a little bit, you see it. Pay attention to this. You see the price tried to go up a little bit. Couldn't reach the first and nearer resistance level. This is a losing trade. The price went back down. More. It did below the pink line. Losing trade do happen, all right? In fact, MACD crosses below a signal line. Right here, all right? So that's what I'm saying to you. One can use the rules, one can modify the rule, one can add new rules. For instance, one may say, do not buy if MACD crosses below a signal line. So, for instance, we buy here, we take first profit here, we buy again above the first and nearest support level, we buy again. Okay, we may let some of the trade run, but as soon as MACD crosses below a signal line, we may decide to close our trade. This can be another rules that we can add to this trading system. Price display again, double bottom here, so price went down. See this zone again, we see a double bottom. Now we are again at the peak line, and MACD crosses above signal line. Okay, we will look for opportunity to buy. We are not violating the market principle. We are working with the price alone. Price reaches the first and nearest resistance level, take first profit. Price finds support above the first and nearest resistance level, buy again, take a second profit at the second and nearest resistance level, and so on. Now again, the computer says, George, here we are. I've seen again another double bottom pattern, this one and this one. Well, where is MACD? What is MACD doing? Wait for MACD to cross above signal line. We will verify that the pink line is a key level. Here it is, MACD cross above signal line, or better way, instead of using MACD, we can use the trend line. Come a bearish trend line on our entry time frame. Okay. Here, this trend line here is kaput. We buy. Again, the computer may say, George, here we are, again, another double bottom. But you can see that this one did not work very much. Losing trade do happen. Okay, another double bottom pattern. This time it works. And so on, and so on. I hope you have learned something from this video also, all right? And we'll put it to use to make excellent decisions. This is about high frequency MACD trading, part 2. I invite you now to follow me in the next part of the video when we will talk about high frequency MACD trading, part 3. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.